It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Tuesday evening, July 5th, 2016. We're back from the holiday weekend, and we have some great trading opportunities going into tomorrow's session. Crude oil, S&P, and Euro are bearish, while the gold is bullish going into Wednesday. We've got Non-Farm Friday right around the corner, so we are looking forward to making the most of this holiday-shortened week. Before we jump into our charts and start putting together the plan for tomorrow, I do want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. That'll take you over here to our blog where you can watch the full-length version of tonight's nightly newsletter. While you're here, don't forget, grab a free pass in the upper left-hand corner. Come out and join me this week as a guest in our trade room. Right below the video, lower left-hand corner, don't forget to register as a member of our mailing list. Name, email address, and then make sure you check your inbox. I'm going to send you a welcome email to make sure we have the right email address, and I'll send you an email every evening when the nightly newsletter goes live. Also, you can download all the charts you see me using in tonight's video. Follow that link below tonight's video on the blog to download the charts and have them ready for tomorrow. And of course, don't forget to join our free trial membership over on the right-hand side of the website. Learn the who, what, where, when, and why. School of Trade is known as the industry leader in day trading education, and I'm always here, of course, standing by 24/7, 365 to answer all your questions. Don't forget, you're going to learn more with me on that trial than you will anywhere else on the interwebs. I can guarantee you that. Grab your trial membership over on the right-hand side of the blog. Enough chit-chat here, Joe. Let's get this thing put together here for tomorrow. Let's check the schedule for tomorrow first, and then we'll jump into our charts and start putting together the plan. Heads up here, obviously, we had a holiday shortened week. That means everything's been pushed back 24 hours. That means tomorrow, Wednesday, we will not see inventories for crude. That will be pushed back till Thursday morning at 11 a.m. So heads up for crude traders. Because of the holiday on Monday, we push back the inventory report on which is typically Wednesday morning. That'll get pushed back until Thursday morning at 11 a.m. Eastern time. Also, for all the rest of us, for all the traders out there, we are looking at Non-Farm Friday this Friday. We'll talk more about that as we get closer, but we do know this is one of the biggest news reports that we get of the month, the first Friday of the month, as long as the first day of the month is not a Friday, which of course was last Friday. So Non-Farm Friday right around the corner here, Friday, July 8th. Keep that on the radar. We'll talk about that later on this week. And again, for you crude traders out there, no inventories until 11 o'clock on Thursday. Okay, so mark your calendar because of that holiday weekend we're coming out of. Things have been pushed back a little bit. Now, looking tonight, anything out of Asia Tuesday evening? Nope, nothing here coming out of Australia or Asia this evening. We've got some minor news from the Germans tomorrow morning at 2 a.m., but really the bulk of the news will be tomorrow morning at 8:30 a.m. with the international trade and ISM non-manufacturing tomorrow morning at 10 a.m. 8:30 a.m., kicking us off here in the U.S. session with international trade, and then ISM non-manufacturing at 10 a.m. tomorrow will be a minor report. And then tomorrow afternoon, if you guys are sticking around for the afternoon session in our chat room, right, we got the FOMC meeting minutes. Always expected to be some fireworks tomorrow at 2 p.m. Eastern time. Heads up though, those FOMC meeting minutes usually tell us that the lunchtime session is going to be pretty slow here tomorrow, so be aware of that if you're used to trading the lunchtime session. Don't forget 8:30, 10 a.m., and 2 p.m. The big news, of course, tomorrow being 8:30 and 2 p.m. So early morning news, that'll get us started off in the trade room tomorrow morning. Don't forget, we'll be in our trade room tomorrow with all of our students here at School of Trade, starting off at 8 a.m. Eastern time, and we'll do it all together. Got your news ready for tomorrow? You know about the inventory report. It's not going to be tomorrow. It's going to be Thursday at 11 o'clock, which I actually prefer. We'll talk more about that tomorrow, though. And then, of course, on Friday, we have Non-Farm Friday. So a relatively short week, but boy, oh boy, is it going to pack a punch because we're still getting some kind of blowover here from, of course, the Brexit vote a week and a half ago. So very, very exciting session going into tomorrow, Wednesday. I'll try not to call it tomorrow Tuesday too many times tonight. So Wednesday session tomorrow. Let's go crude, then we'll go to S&P, gold, and we'll wrap up with the euro. Crude is bearish with a spiking channel down this evening. The bears had control of this market from the very first candle of today's session and sent price tumbling lower inside a very narrow spike in channel before completing the measured move and double down targets and ending the session inside of a trading range. The spike in channel tells us to look for traps. Should I say the spike in channel tells the sellers to look for traps above prior swing highs, because we can assume that trend following sellers will be waiting to scale in for their larger positions as this price goes higher. Now their target will be to go back to the low of day, right? While the trading range tells us to look for selling opportunities up at the high using buyer failures with a target back at the lows as well. So we have a bear spike in channel, a bear trading range on the chart right now. Both of these tell us to look for selling opportunities up above prior resistance areas above, and the target is back at that double down at 46.33. Sellers would love to sell at a higher price, so keep an eye on the resistance levels overhead, and don't forget about the rising support trend line, that green trend line that I have here for a short-term target on the way back to the lows. Buyers will be looking for a breakout pullback above this range high or a 2-try reversal off the low of the range for the most reliable counter trend opportunities tomorrow. Obviously right now this is a very bearish market, so anything for buying right now until proven otherwise will be considered lower reliability and lower probability. Now, got a couple of these spiking channels here right now tonight. We've got a couple of spiking channels. We'll dig into that spiking channel a little bit here today. Spike down, channel out, right? And of course, that correction zone. Let's talk about spiking channels, right? Let's talk about those spiking channels. First of all, there are a number of different rules you want to think about when it comes to a spike and channel. First of all, stick with the direction of the spike, right? That's always rule number one. Spike down, look to be a seller. I know it sounds very basic, but it's very common for traders to get wrapped up in trying to call tops and bottoms. Calling reversals will always be the lowest reliable trade you can take in a trending market. Step number two, the magic of 3. 1, 2, 3. 1, 2, 3. Now, this is not written in stone, and there's no guarantee that we're going to get at least 3 or not 4. But 3 typically means 3 is typically the magic number for how many times we're going to be able to get a reliable sell. That's the key word, reliable sell off the high of that bear channel. Well, what about number 4? That's going to be this. That's the third piece of this puzzle. The third piece of this puzzle says for number 4, look for a pullback into the correction zone. The correction zone is going to be basically the point, the highest point of that channel and the first pullback. That's the correction zone. And that is going to be number 4. Okay, right? So 1, 2, 3 inside the bear channel. Stick to the direction of the channel, right? To the direction of the spike. Now, when we pull back, if and when we pull back all the way to the correction zone, what we're looking for is failures. Buyer failure and then back down. Where's the target? The target is back at the low, right? Back at the low. Now, one more thing. If the buyers can get and hold, and we're going to see this on the euro, if the buyers can get and hold, then their target is going to be back to basically where the whole party started, back to the beginning of the spike. So stick to the direction of the spike down, in this example, of course, right? Stick to the direction of the spike. In this example, it's a bear spike down. 3 reliable opportunities selling the high of that bear channel. The 4th will typically go back into the correction zone. At the correction zone, we're looking for the buyer failure and then back down to the low. If the buyers are able to get and stay above the correction zone, they get a nice opportunity here now to run this puppy back up, right, to this, in this case, to the high of that spike. All right, guys, so as you're looking at this, we got a couple of them, bullish, bearish, right, you'll see tonight on the newsletter. Now that we have this example out of the way, now you can see there's my spiking channel, right? There's my spiking channel. 1, 2, 3, 4 now tries to trap high. Okay, we can definitely tell here that there is a correction going on right now. So we know that we have that bear spike in channel. Look at how high the correction zone is. The correction zone puts you literally back up almost at 48, 47.80, up that 48.10 area, right? So that's the correction zone. This gives the buyers quite a bit of room here now if they can get this breakout pullback to hold. It gives them quite a bit of room to get up to that correction zone. So that's definitely what the bulls are looking for right now, but they have to get away from this trading range. Let's talk about trading ranges. Trading ranges. First of all, if there's a directional bias, which there is in this one, we want to follow the direction of the bias, right? That, of course, then leads into this trading range. Now, rotation, low to high, high to low, low to high, high to low. We're at the highs right now. Where's the range want to go? Back to that low. Quite simple there, right? Now, what are we trying to do at the high? Okay, so what's the first thing? First thing is follow the direction of the move lower. Okay, that's your bias. Second thing, use range rotation. Sell high, down to the low. Third piece, how do we sell high? We focus on failures. Focus on failures. What does that mean? That means look for buyers to try to buy the breakout. When they fail, sell it back down. One more piece here. One more piece. Range expansions. Take the size of that trading range, project it down, that gives you support. Project it up, that gives you resistance. That's what we're seeing in the chart here this evening. So right now, we have that strong bear move, right, into the trading range. Range rotation. We're at the high right now. What are we doing here? We're going to focus on failures, right? We're going to focus on buyer failure, back down to that low. Okay, another target below here at 45.90. Resistance above at 47.36. So focus on failures as this price goes up. This is where buyers need to hold this pullback, because if they can't, the sellers will be looking to sell this right back down into that range. Target at the low, and then of course a runner target at the range expansion 45.90. So let's play that game. If you're a buyer, if you're a seller right now, bottom line, if you're a seller, you've got the easier job because you have the edge over the bulls. Right? This is a bear market. Sellers looking for buyer failure at the high of that range. Sellers looking for traps above all of these areas of resistance. We may not get all the way to the correction zone. As the price goes higher, sellers looking for buyer failure. Failure from the buyers will lead to strength from the sellers. Watch out for this rising support trend line, assuming it's still there. And then we're looking for that move back down to retest that low. The higher this thing corrects right now, the more we have to assume these sellers are going to be interested. Big move down like this, sellers are not going to want to sell the low. They're going to sell above swings. Sellers will be waiting above all of these prior swings as we go higher, and the correction zone is ultimately where all the sellers would love to get back in for a chance to go back down to that low. So with that said, we don't know how far this price will pull back. All we do know is that if the buyers can't hold, sellers will attack with a target back down at that low. That means bulls, what are you guys going to do? Well, this is where you got to hold a pullback. You've got to hold a pullback here right now to get anything going here. You've got to hold that pullback because that will tell the bears, back off, give me some breathing room until we go back up to that 47.36. But then from there, it's the same thing, right? Buyer failure, sellers be looking for that move back down to that low. So watch closely as you go up to areas of resistance. Really the milestones right now are going to be the high of the range expansion, and the correction zone. That's where the sellers are going to be looking for buyer failures for the most appetizing opportunities, right? And most reliable, really, to get this price back down to those lows. One last chance here for the bulls would be a double test, right? A two-try reversal off that low. It's extremely low reliability, but overall compared to being a seller right now, but that will be the next opportunity here, and that would be if the sellers get back down to that low, let them try again, and then if they can't keep it going lower from there, then sellers try once, sellers try twice. We call that a two-try reversal. And of course, we'll be doing this together with our students tomorrow morning live in real time in the trade room. Okay, so buyers, be careful.